Hey guys, how's it going and thanks for coming. It's Nick and it's still relatively new in the year. So how are your resolutions coming? Are you still going to the gym? You still saving more money and contributing to your retirement accounts? Because most people already failed. Because we have to be doers rather than sayers. Because you know what they say, those who can't do, teach. And those who can't teach gym. If you guys know what movie that's referencing, let me know. That's a great movie. Ironically, I'm teaching you guys this, but I am doing this. I do have a 401k. I max out my Roth IRA, which we'll be talking about in this video. So we got Roth IRAs, traditional IRAs, how to avoid taxes, because we all want to avoid taxes, and penalties, including new IRA rules for this year in 2020. Quick disclaimer, I'm not a professional in any way, guys. I've done research, looked into it, and this is what I found. So if you do decide to act on any of these, make sure you consult with a professional and do your own research, please. So I'm just here to help you out and kind of narrow down the research for you. So we're going to start off with the Roth IRA. And with all of these, I want to try to make it simplistic for you, straight to the point, so we could all actually understand it. So to qualify for a Roth IRA, you have to be making under $124,000, and it starts fading away until you hit $139,000. So if you're under that amount, which most people lay, then you could contribute to a Roth IRA. So this is how a Roth IRA works. You contribute money that has already been taxed. It grows tax-free. Now once you retire, you're able to withdraw that money and pay no taxes. Because you already paid the taxes in the beginning, it grows at the end, no taxes. Now how much could you contribute to this? Well, great question. So in 2020, you could contribute up to $6,000 per year. That equates to $500 a month, so it makes it very even. Now that's up to the age of 50. When you're above the age of 50, because you're getting closer to retirement, you're able to contribute a little bit more. So instead of that max limit of $6,000, you're able to contribute $7,000 per year. Now withdrawals from your retirement account in your Roth IRA is until you hit 59 and a half. Don't ask why 59 and a half, people just make it complicated. Now there could be penalties if you withdraw any money from your Roth IRA before the age of 59 and a half. However, there are ways around to avoid those penalties. So early withdrawals of earnings is penalized, not what you contribute. So for example, if you throw $1,000 in, it grows to $1,200. The earnings is $200 because it grew to that amount. You put in the $1,000. So you could withdraw the $1,000 penalty free. If you withdraw that extra $200 that you grew, you would have to pay a penalty on. Now if you do have any rollovers into a Roth IRA, you would have to actually keep it there for 5 years. Then you could start withdrawing penalty free. Now there are some qualifying reasons why you could actually withdraw money from your Roth IRA. These are some things that I actually just learned today. Because everyone likes to avoid penalties, no one likes extra costs, especially those stupid little ones that are easily avoidable. So listen up. So some qualifying reasons that you don't have to pay penalties on could be college expenses for you, your spouse, children, or even grandchildren. Another qualifying reason, something I just learned, which is kind of cool, is excessive medical expenses or medical bills. So if you have a huge expense medically, it has to be under 10% of your gross annual income, or if you're over the age of 65, it has to be under 7.5% of your gross annual income. So if you have a lot of medical bills, you could actually use some of your IRA money. Something great I think everyone should also know is that if you're a first-time home buyer, you could actually use your IRA to help you out as well. So if you have money in your Roth IRA, you could actually withdraw up to $10,000 to help you buy your first house. And the last one that I'm going to go over real quick, if you have a sudden disability, you could start taking withdrawals penalty free as well. Of course, make sure before you do any of this to actually consult with a professional. I'm just a guy like you. So those were kind of the main basics of a Roth IRA. Now we're gonna battle with the traditional IRA. So a traditional IRA, which a lot of people have in the form of a 401k, is how this works is that it grows tax deferred with pre-tax money. If you remember back to the Roth, it actually grows tax-free because you pay taxes in the beginning. A traditional IRA or a 401k, you pay taxes at the end when you retire. That's why a 401k, the money comes out of your pay before it's taxed. Contribution limit actually increased in 2020, so now you could contribute up to $19,500, or for a combined total of employer and employee combined contribution of $57,000, or 100% of your income, whatever's lower. To make this part really simple, most people just put in maybe like 5 or 6%, really depends how much the company matches, but you can do 5-6%, maybe 10%, and you'll be fine that way. Like we kind of just touched on, once you do retire, when you take money out of this account, then you pay the taxes on it. And you have to start taking minimum distributions from this account at 72. So you can't just have something on the side like a savings account and never take it and just keep letting it grow. You actually have to take money out of it, versus a Roth, you could constantly contribute. So those are the main qualities of a Roth IRA and traditional IRA, 401k, and we're going to be going over two big factors that you have to concentrate on. But first, let's talk about some new changes in this year, 2020. So before continuing, I would hope that that kind of narrowed some things down, simplified it, and condensed a lot of the information out there to help you guys out. So if it did, you're welcome. Hit me with a thumbs up to let me know that. And of course, if you have any questions, you could definitely leave them in the comment section down below. But some of the main differences that 2020 changed from previous years is that, remember when I mentioned it was with the 401k, you had to start taking money out of it at 72? Well, other years it used to be 70 and a half. Again, with that half, just to make it more complicated. But now it increased to that age of 72. Another big change that was implemented is that before, at the age of 70 and a half, you could no longer contribute to your account. But now you can, and for however long you wish to do that. So if you retire, you could still contribute as long as you have earned income. A little addition as well, which would require a lot of like tax planning and everything, but for inherited IRAs, so if someone passes away, you get it from like a grandparent or a parent, and you have an IRA, you have to distribute that within 10 years. Couple other changes before we get into the two main factors that you really have to focus on for an IRA. But some other new ones is a 529 plan. So college plans. You could actually use anything else like a remainder in a 529 toward your student loans up to $10,000. Something else I just learned, which is actually pretty cool, is that if you have a new child or you adopt, you could actually take up to $5,000 from your IRA to help with that. No penalties. Unfortunately, if you do that, you do have to pay taxes on that. So if you have like, you use pre-tax money like a 401k and put it in your account, take it out for a kid, you still have to pay taxes on it. You just don't have to pay any penalties. Because Uncle Sam needs his cut too. Now there was a couple other different changes that 2020 brought, but the last one I'm going to go over is something that's pretty cool, is with part-time workers. So normally, like a lot of part-time workers really don't get any type of benefits, especially with retirement accounts. Well, with this new change is that as long as you work a minimum of 500 hours a year, which is like just under 10 hours a week, so part-time workers, and a consecutive of 3 years, you could actually start contributing to an IRA. So for me personally, those changes for 2020, they're cool. Some have cool perks and everything. They're not huge, life-changing differences, but I'd rather have some change rather than none. I do think there should be more changes with Roth IRA, or just IRAs in general, but that's what we got. Alright guys, so as I promised, we went over Roth IRAs, traditional IRAs, and some new changes for 2020. But now, we gotta focus on two of the biggest factors that you have to decide on. So, as we were describing the Roth and traditional, the first main factor is, when should you pay your taxes? The Roth, you pay your taxes now. Traditional, you pay your taxes later. You make that decision. Now, if you don't want to make that decision, you can have both. That's what I personally do. So you can have a 401k through your job, and you could have a Roth IRA on the side. So you're paying some of the taxes now, some of the taxes later. Of course, consult with your financial advisor, accountant, and all those professional guys, but just also understand that taxes are at like all-time lows, especially recently. So, is that going to continue? No one really knows, but reversion back to the mean, meaning usually things go back to the average. Over time, we might see income tax increases, which means more tax now. So if you want to take advantage of these lower tax rates, you could actually pay taxes now rather than a possible increase in tax later. That's not guaranteed. This is an opinion, just something to think about. So that's the first main factor to focus on, is when you want to pay your taxes. The second, and I think most important one that people don't really think about, is just contribute. I don't care how much, I don't care how little, I don't care where you put it. You could pick Roth, you could pick traditional. Just contribute. That's the main factor. Why people don't have enough money for retirement is because they don't save for retirement. So no matter what you do, make sure you do something. Some people overanalyze like what kind of allocation you might want. How many, stocks versus bonds versus real estate versus savings versus all these different things. Now we might have another video like that if you guys are interested of, what allocation you might want. We could definitely talk about that. But more important than that is just contribute. I don't care where you put it, as long as we save for retirement, that will be better than anything. Again, if you guys are interested in what I do have a 401k with the job, as well as I max out the Roth IRA, which is $6,000 a year. So you could definitely go through your budget, look at your cash flow, what could you afford, and just understand the idea of compound interest. You need to start sooner rather than later. So guys, if you have any questions, comments, concerns, please leave them down below. I would love to hear what you guys have to say. What do you think is the best for your situation? Everyone could be different. But guys, thank you so much for watching. Really appreciate it. Hopefully this was educational. I threw a lot of facts at you. Thanks again for watching though, and I'll see you in the next one.